Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in this video I'm going to talk about what to do after you have consumed your impatriate regime or if you have exceeded your fourth regime threshold. If you're new to this channel, ESENtaxa talks about how to optimize your taxation if you want to move in Europe in a specific jurisdiction, and we are the #1 channel that in English language explains all the nuances, details, and structure and optimization, tax optimization if you want to move in specific jurisdiction, mostly in Italy, and we also cover other jurisdictions such as Belgium, Republic of San Marino, Albania, Portugal, and Belgium. Now, in this specific video, I want to remind you that sooner or later, your tax regime that you have applied once you became Italian tax resident at a certain point will expire. And the big questions that a lot of clients are asking us, and actually we're getting this question more and more often, the big question is, how is going to be after 5 years? What is my tax regime that I have to follow? What is my strategy? What is the tax planning afterwards? Okay, because at a certain point I'm going to be an ordinary Italian tax resident without benefit from any tax regime, and I'm going to risk to fall into a situation where I'm going to pay up to 60% taxes and social security combined. And we have to absolutely avoid this situation. So what we have to do is to plan in advance. Now, before I'm moving forward, I just want to remind you that if you need a consultation with us, in the description below the video you have our calendar link. And if you're thinking to move to a different jurisdiction, generally speaking, not just to Europe, also outside Europe, we have prepared an online course. In the description below the video you will find the link, in which we explain you in very easy manner all the international tax matter and subject that for us are extremely important to understand in advance or prior any tax consultancy. Okay? If you want to approach any tax expert, you must have at least a background knowledge in order that basically helps you to understand this new fiscal language, this new tax language. So that's the reason why we have designed this online course, and you have basically in the description below the video our link. Okay? So I was saying, if you're moving to Italy, you became Italian tax resident, probably you are applying the fourth regime or you're applying the impatriate regime, okay? Or you're a high net worth individual and you have applied the taxation, flat taxation of 200,000 euro. And in any cases, at a certain point of time, you exit those regimes. Those regimes are not forever, unless the government changes idea. But we will see in the future. So, but let's prepare in the worst case scenario. Let's design our strategy in advance, many years in advance. This is what we do in ESENtaxa. Now, let's start from the beginning. Let's start from the most obvious choice. The most obvious choice is to move into set up yourself as a company. Okay, this is what happened basically in most of the country all around the world. You want to switch from a freelancer position, which was mandatory for an impatriate regime or fourth regime, for example, and you need to switch to company, because the company, an entity in which you are the administrator and you are the shareholder, allows you to optimize taxes. It allows you to give margin of maneuver in order to deduct certain expenses or extra expenses, save some money in the company bank account and not be subject immediately to taxation, as it happens if you were a freelancer, for example. So there are several ways, or you can use a dividends, royalty system. There are several ways that allows you to basically reduce your taxation. But still, the Italian companies are not the best entity in the world to optimize your taxes. I said this at the beginning. And why so? You have to switch your mindset when you change your country. When you change a country, not just the mentality that changes, it changes also the tax system, the fiscality, the mentality is completely different. And companies in Italy, the entities, are designed to be constructed and built by multiple people, are not designed by default to be owned by only one person, sorry. So basically, that's the big misunderstanding and the big mistake. If you move to Italy and you end up immediately opening a company, let's imagine you don't qualify for any tax regime, you want to go straight to a company. And you're alone, you're the only shareholder, you're the only administrator, I would say that this could be most likely a big mistake, because companies in Italy are meant to be owned by at least two persons, okay, or two entities, okay, or one person, one entity. So it's basically are meant to be constructed by multiple persons, okay? And only in this way you can really take benefit from it, okay? Because if you are only one person, you will be subject to the corporate tax, to the dividend tax. The corporate tax, it reaches 28%, because it's composed by 24 plus 3.9 regional corporate tax, let's call it like this. Then you have a big 26% of dividend tax, and then if you are the only shareholder, you also pay Social Security on undistributed profits, which is another big 26% or 24% based on the type of Social Security you have to pay, and you end up paying basically almost 70% of taxes. This is it's a tax hell. The reason why is that is because one person is supposed to be the operative person, which pays the Social Security, another person is only the investor, so the structure is designed to be owned by multiple persons. So how do we overcome this issue? Now, the solution, it's changed based on the situation. It's a case-by-case analysis and scenario, but we have multiple tricks that we can use to avoid you to pay Social Security on your dividend level, avoid you to pay the big 24% of corporate tax, and also allows you to reduce your dividend tax. Because yes, in Italy there are also the trick to reduce your 26% dividend tax down to 12%. There are some tricks that we in ESENtaxa can tailor it for your specific case and your specific scenario if you want to keep staying and living in Italy after you having exit your forfeit regime and or impatriate regime, okay? So we have learned that Italian companies are designed to be owned by multiple persons. But the Italian company, the Italian limited liability company, which are known as SRL, is not the only juridical instrument that you can use to optimize your taxation. There are other typologies of companies that a lot of people are not aware of course, but also Italians that live in Italy, they are not aware, they have no knowledge about it, because accountants, they are so lazy to explain them these structures. In Italy exist several types of entities which can be considered an hybrid solution between an unlimited and limited company, where only certain shareholders, or only one shareholder, is fully responsible, like unlimited responsibility, and the rest of shareholders are still limited responsibility, but you have a very light and easy structure that costs you less and basically allows you to skip the corporate tax, because they are pass-through company. And this is a very important concept. Italy allows you to turn your company in a pass-through, like an LLC. Okay? So you have first the mindset. Keep in mind the companies in Italy are designed for multiple persons, and they can be also pass-through company. And when you run a pass-through company, you skip the corporate tax. Money comes straight to you, pass through the company, you only pay the 3.9% regional corporate tax, and that's it. And then the money flows into at least two shareholders, because you need to have at least two shareholders for this kind of company I'm talking about. Now, if you are alone and you're going to tell me, but how can I have an optimized Italian company if I'm alone? Well, there is a trick. I mean, this type of structure allows you to have, as a shareholder, also entities, non-commercial entities. And non-commercial entities as a shareholder could be trust incorporated abroad and fully registered in Italy, in which you are the not specified beneficiary. And then you have also constructed a multiple shareholder company where only one of the two persons are limited or unlimited responsible for the company itself, and then you can basically design your strategy, and you are more flexible in terms of taxation, because you pay, well, you optimize a lot more the taxation, because as I said before, you have a pass-through company. And at the top of it, you can still have the chance to own a multiple person company, but using a non-entity commercial, an entity non-commercial, okay, as part of a shareholder. You can also play with the percentages. You can own as individual 90% of the share and let them just 10% of the share be part of this entity which is still owned by you. You see? So there are plenty of ways to optimize your taxation, your structure, to lock your wealth inside a company and also pay less tax possible. Keep in mind that with an entity, an hybrid entity, you can, as I said before, you pay only 3.9% corporate tax, that's it, and then what remains flows straight in your pocket, either as an individual or it flows straight to your entity. For example, if it's a trust registered in Italy, you pay only 24%. So you pay 3.9 at the corporate level and then 24% as a dividend. And if this non-commercial entity is a trust in which you're not a beneficiary, which is not specified beneficiary, at a certain point of time in the future you can get back this money tax-free. So you see you pay only 3.9 and 24. Or if you're an individual, you pay 3.9 as a corporate tax, and then you pay basically the dividend inside your RPF taxation, and if it's not a big dividend, you pay less than 26%, so you're going to pay 23%, okay, because you use the tax bracket rates. And a lot of people are not aware of that. If you own an Italian limited liability company with an hybrid structure, the dividends can flow into your RPF cut by half, because Italy has an internal tax. You see how many concepts I'm throwing here in this video. How can you how many instruments and rules and regulation and entities you can combine with each other and make your tax as low as possible. So, if you want to have a clarity of this, if you want to have a very full picture of what you have to do after you have consumed your tax regime, you can have a consultation with us here in ESENtaxa. We can help you to understand the best structure tailored for you, for your specific situation, okay? Even if you are one only person and Italian company are designed to be owned by multiple persons, we have solutions also to overcome this situation. And that's it for today's video. If you have any questions, you can write us in the comment or like button, notification bell, in order to be always updated whenever we release this kind of content. See you to the next video. Bye.